Welcome to our presentation of the accounting working papers. My name is Gregory Enright and I'm the designer of these working papers and also a partner of the Enright Holmes Chartered Accountancy. I've been working on these working papers now for over 10 years with the aim of providing the most simple and productive software which we can use for our compliance work within the office here. The program itself consists of 50 Excel linked working papers which are pre-formatted with hyperlinks, calculators, pre-filled information, graphs, journals, information, which are all designed to make the accountant's job faster and more efficient. I'll now go through the working papers and show you how they work and give some ideas how it all fits together. Thank you. I will now go through the basics of how the accounting working paper system works. In this regard, I've entered some of the base information to speed up the demonstration. The page we're on currently, this is known as the home page, and it's the central hub of the program, and it links to each of the other working papers. So when we just go and click, for instance, any of the working papers, it'll go into the next one from there. So with the working papers also here, you can see which has been done and which ones haven't. The ones which have got the little tick in green, they've been completed. The ones are in the red cross, they need to be worked on. And the ones with the brown dashes, they're the ones which are not appropriate. On the top of the page is the enter we actually enter on each of the working papers, and in this one here we've got the Labrador Constructions Pty Limited, and our practice is Enright Holmes Chartered Accountants, so we enter that information through there and that will then flow through the rest of the working papers. So as I say, this is the central hub of everything and is the base for all the information. The next working paper which we look at is the opening balances, and this information here records who the partners are, the name of the company, ABNs, business owners, shareholders, and the closing balances from last year. So after the first year, this actual information can be cut and pasted from the prior year working papers, but in the initial setup, you just need to enter the information and that then flows throughout the working papers. The next working paper which we work through will be the setup data. In this case here, we look at the type of entity, and in this case it's a company, so from the drop down box we select company. That's important as it flows through and determines what working paper is required. And then for the small business entity, answer yes, because this one actually does run a business. That influences the tax calculation, so they pay the 27.5% and not the 30% through there. And you can also see where the information is starting to flow through now. There's the individual information, giving names, ages and everything else, and that then flows through the rest of them. So when we do a working paper, we go at the top and we mark it as being done. So that one's yes. So that makes that one done, and if you go back there you'll see the setup data that's been done as finished. So the next one to do is going to look at the BAS data. This one here is we go through and enter the BAS statements as lodged with the tax office. These actually is a cross-checking mechanism whereby it's amazing how many clients, what information we get at year end varies from what actually is being lodged in the BASs. So that information then feeds through into the working papers, and that's always a great way just to double check everything. The next one is actually the journal. So what we do here, this information is extracted from the client's My QuickBooks or Xero files, and to do this we actually just save it as an Excel document, and then we just drop it straight into this through here by cutting and pasting. Once again, no data entry, and all this is done by the accounting support staff. The accountants only start working on these reconciliation working papers. So once the information is preloaded, the codes are then added, and you can add, and typically for instance, if we have another type of expense and we call it electricity, then that would then come through, and what it does, pre-codes an amount, and you can see there it just adds the code which is associated with electricity. So the whole spreadsheet's all pre-formatted, and that way we don't make any errors through there. From here, we can then actually, once it's been coded, we can then import it into Handy Ledger or to Xero, whichever one you use, and that information then would flow through and then starts up the trial balance. So that's the start of that, and from there we would do the adjusting journal entry. So this is where the accountants now start the work. What we've got here is the information from the BASs which flow through automatically. We've got the information which we put through automatically from the ledger, and then that tells, in this case, is a small variation, and that's what the accountants need to do. There's actually an automatic adjusting journal entry done by the program, and whether you accept that is up to the accountant's discretion, and that's what their job is. Same thing happens with the wages, for instance. That's the wages per the BASs, that's the wages per the financial statements. In this case, there's only a small variation. Sometimes you may not worry about it, otherwise you would journalise that entry through there. And with the journalising of the entries, those are automatically prepared as well, and they go into a worksheet which is also done. The depreciation, or the amounts from the initial starting data, flows through, so the calculation for depreciation is made automatically. You can add additional assets in there, but if nothing was changed in that year, what happens is it's got the amounts right up between motor vehicle depreciation or other depreciation. The journals are preset, so the accountants have just got to enter their journal through there. With insurance, always adjustments to insurance. There might be an adjustment there for some private health insurance, which has found its way into the system. You enter what that is, and that reduces the deductible insurance. That's cross-checked to the financials to make sure all that's good to go as well. With Division 7A, that one there's actually no calculations required unless you've got some exempt or pre-97 loans, and that will then calculate straight away for you, no work required, about what's the minimum repayment, what's the interest to be included within the financial statements for that year, and then what the dividend is going to be if you don't pay additional salary, or how it's going to balance through. So existing motor vehicle, that's here. You just add some base information. The vehicle hasn't been sold, it's an existing vehicle. What was the closing odometer reading at the close of the financial year? And that tells us under the statutory method the amount of kilometres, the rate to be used, what the FBT employee contribution may be. With the other calculation using the operating cost method, that's already pre-filled. The only information coming through is what operating costs you may have. That shows a lower FBT amount, and then that would then be journalised to come across as well. The final one is all the graphs and that. This is an overview, basically giving an executive summary. The audit risk tells us how much audit risk. The only information required to enter in any of these is actually just the ATO benchmark. So apart from that, that's how it all fits together. It's all interlinked and all goes back to the central hub. So on that basis, that's where you go from, and that's how it all works together. So if you have any interest in these working papers, please visit our website, Accounting Working Papers, or call our helpline 042 362 6557. Thank you.